Equity Market Update, December 2023. Indian equity markets sustained a remarkable performance, concluding the year with Nifty and S&P BSE Sensex registering approximately a 20% increase. This marked the 8th consecutive year of positive returns. The mid-cap and small-cap indices notably outperformed the large-cap benchmarks. Key drivers and events during the year included resilient growth in the US, a decline in oil prices, the Israel-Hamas conflict, ongoing monetary tightening by central banks in advanced economies, volatility in US and European yields, disappointment in China's growth, resilient domestic growth, and substantial government capex spending. Most sector indices saw gains, with capital goods, auto healthcare, and utilities emerging as the key outperforming sectors. Globally, most equity indices across advanced economies and emerging markets experienced gains, except for China and Hong Kong. In 2023, foreign portfolio investors were net buyers of equities worth USD 21.4 billion. This marked a notable shift from the previous year, when they were net sellers of USD 17 billion worth of equities. Domestic institutional investors stayed net buyers, purchasing equities worth USD 22.3 billion in 2023. Flows into mutual funds remained steady, reaching approximately INR 248,000 crore in 2023, compared with approximately INR 224,000 crores in the previous year. Key trends in 2023. Corporate profitability remains robust. Corporate profitability among listed companies improved, driven by profit enhancements in the energy sector, oil and gas, power, coal, etc., banks, and the automotive industry. This positive trend has outweighed the subdued performance observed in the IT and metal sectors. As a percentage of gross domestic product, the corporate profit to GDP ratio has climbed to 4.7%, marking the highest level in the past decade. Rising participation of retail investors. In 2023, there was a notable surge in retail participation in the equity markets. Systematic investment plan flows experienced a substantial increase throughout the year, constituting approximately 40% of the assets under management of the mutual fund industry for equity-oriented schemes. Importantly, this expansion in retail participation was widespread, with the number of investor folios rising. The ownership of mutual funds and companies listed on the National Stock Exchange increased to 8.8% as of September 30, 2023, compared to 6.4% on September 30, 2018. Outlook. As on December 31, 2023, Nifty 50 was trading at approximately 17.9 times FY26E price-to-earnings multiple. Further, market cap to GDP stood at approximately 100%, and the gap between 10-year G-Sec yield and 1-year forward Nifty 50 earnings yield inched up too. Current valuation multiples are at premium to their historical averages. However, one should view these valuations in the context of structurally attractive nominal GDP growth, a healthy corporate earnings outlook, and robust delevered corporate and banking balance sheets. Valuations for most major sectors are higher than their long-term averages. The sharp, broad-based rally in the current financial year has resulted in small-cap and mid-cap indices significantly outperforming, and they now trade at a noteworthy premium to their long-term average valuation. Given the aggregate valuation being higher than historical average, the importance of stock selection increases even more. We remain positive on equities over the medium to long term, considering the structurally robust domestic growth outlook, healthy corporate profitability, and pro-growth policies. A sharp slowdown in global growth, escalation of geopolitical tensions, and re-acceleration in inflation globally or locally are material near-term risks. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.